to the channel. Here we have a USD JPY outlook, something a little bit different at the channel here at Liquid FX, but looking to implement a few different markets to see what people like, right? So here we have the weekly time frame on USD JPY or UJ. So this is the weekly time frame, right? W1 or the weekly time frame. So how am I looking at this chart from a very, very high time frame perspective? So I'm going to be analyzing my structure, the way I look at structure, and you can compare it with your charts to see if your structure matches up with my structure. This is how I look at structure, right? On the weekly time frame is where I start. So the first thing I look at is my structure. So we have a structural high, sorry, a structural low over here and a structural high. Structural low, structural high. Now this is the last high before this low got broken over here. Okay? So from here we understand that we're pretty much bearish on this pair, and we have been since the beginning of this pair's origin. So we have a structural break over here. So if I label that with a break of structure, this is a boss. What makes it a boss is the fact that it breaks with the body. So we have a clear boss over here, right? This repeats itself over here. So we have another clean boss over here. Same thing, we have a boss, right? So now the next thing we want to do, if you've looked at any of my previous videos, is that we want to dissect our dealing range. Where's the last structural high and where's the last structural low? So our last structural high is all the way up here. This was back in, I believe, what year was this? 1998. And our last structural low, the lowest point of this market was down here in 2011, right? So with that being said, has price broken above the last high? Yes, it has. So this is our break of structure just over here. So now that price has broken the last high over here, so price is now officially bullish. You can say unconfirmed bullish. So because price has broken this high, what do we expect? So now we have to really go back and dissect what price action was doing all the way up here. So all the way up here, price action, the candles here are a little bit unclear. But what we have over here is that we have a very large area of inefficiency, right? So this large impulsive move to the downside represents an area of inefficiency. So if I label that in blue, these are massive fair value gaps in price, right? So these fair value gaps in price represent one thing. The algorithm, the IPTA, the interbank price delivery algorithm, will look to target these areas of price. So if we go to the most recent price action, we saw that last weekly high get broken. And now from here, because of that, we're pretty much bullish. So my overall narratives on UJ longer term is pretty much bullish, and I expect price to get all the way up to this sort of level over here, right? So for those who are interested in my outlooks and my price, I expect the price of UJ to get up to at least 177.4. So I expect the 177.4 mark to be hit, and the reason for that is because we have fair value gaps above this point. So at minimum, I expect price to get up to 177.4. Okay, for the simple reason is that we have inefficiencies above us and we've broken the last structural high, right? Another thing I want to bring to people's attention is the idea of supply and demand, right? So what we had over here is that we had a supply chain get formed. Okay, so we had a supply chain get formed. This here was a supply zone over here, this supply zone over here, this supply zone in grey got tapped and we saw lower prices, right? We saw another supply zone in and around this area over here. So this supply zone created another supply zone in this region over here. So we saw another supply zone get hit over here. Not quite mitigated, but yet we see supply and control, and we saw price head down again. Price action from here mitigated the supply zone, I think it did, round about this level, and price fell off again. So since then, what's happened is we've had a shift in sellers to buyers, right? So sellers have lost control at this region over here. We saw supply give a reaction and then fail. So what this represents is it represents a flip from supply to demand. So what we saw is we saw a massive chain of supply which couldn't ultimately hold, and we've had price break. So this is another very strong indication for higher prices, as well as the fair value gap over here. So if we go down a notch to the daily time frame, we can begin to dissect inner levels of structure. So if we look at our most recent daily chart over here, what can we see? What can we identify? What can we identify as traders, right? As traders, we understand that we had very shallow retracements to the downside. So we had a very shallow retracement followed by a push. Shallow retracement, push. We had a deeper retracement over here, which did break structure, right? So, but what did this deep retracement lead to? Well, the deep retracement led to another almost breaking structure over here, right? So we understand that Our current dealing range is very simply from this swing high down to this swing low over here, right? So with that being said, what am I looking for on this pair? So we need to understand one thing. Where is our fair value gaps in the premium, right? So we have a premium zone over here. This premium zone is valid because yes, it's in the premium and it leaves a daily fair value gap. So this fair value gap over here, or this FVG, hasn't really held, right? We've seen price come right up to the premium over here. So we have a premium over here and we have a fair value gap over here. So this fair value gap, or this daily POI, this daily supply zone, hasn't quite held. And so because of that, what I would expect ultimately is for price to simply continue higher. Now, there's two ways we can look at this, right? There's two ways we can look at this. If we were to go down to the 4 hour time frame, what we see over here is we see price giving a daily chalk over here. So this is how I'm looking at my chalk. On the 4 hour time frame, this would be a boss, but we've seen a daily chalk over here. My chalks are always in black. So now that we've seen a daily chalk, right? We've seen a daily chalk, and we've seen another daily chalk over here. So this then becomes a boss, technically, or an internal boss, should I say. From here, we see internal levels of structure being broken once, twice, but 3 times all the way up here. Okay, what's the next thing we want to look at? From a supply and demand perspective, what we had over here is we had our last demand zone over here, which got respected. So this demand zone over here, this zone over here, again, it leaves a fair value gap just above it. This daily POI over here was respected, right? And now since then, we've just headed higher, okay? So what I expect with this pair is I expect this high to get broken over here. So this high at 151.9, 152, I expect this to ultimately get broken, and I do expect higher prices. Now, if we just go down one more time frame to see price action in a little bit more detail, we had the H4 shift structure from bullish to bearish in this region. So we had price bearish, and then changed bullish, and then confirmed bullish. So what we had over here is we had our change of character. We had price head down, bearish structure, give a chalk, give a boss, and we've had another boss over here. So what we've had over here is we've had a chalk on the H4. We've had a change of character from bearish to bullish, and we've had 2 breaks of structure after this. And these breaks of structure represent the fact that buyers are in control and we're bullish in terms of our structure. So what am I expecting now on UJ, right? Based off our higher time frame analysis, right? I expect price to go up, and how price could do this is very simply. We could just tear up tomorrow, so we could see price really reaching for it, or we could see price give us somewhat of a shallow retracement down to a premium zone, sorry, down to a discount zone. So this swing low over here and this swing high over here represents our dealing range. And as you know, we should be looking for buys in the premium. So either we could see price just rally up because the higher time frames are bullish in terms of the narrative, or we could see price head all the way down here and then shoot higher. Now, what's the reason for price to head lower before it heads higher? Well, there's 2 reasons. We have a liquidity pool just over here. So we have trendline liquidity forming over here in red. So that's our internal range liquidity, or our sell side liquidity. But more importantly, in the discount, we have a fair value gap over here. This is an FVG, or a fair value gap. And this fair value gap is an inefficiency in price, which could be targeted. Price could mitigate lower before heading higher. So we could see price follow this arrow or this arrow. Now your job is to use the lower time frames, the M15, the M5, to dissect whether we're retracing or whether we're continuing. And we use higher time frame liquidity and dealing ranges to get involved. So if you like this video, give it a like and a thumbs up, and I look forward to seeing all of you in the next one.